One company, one earnings report, and literally the ultimate test for the entire artificial intelligence economy. Welcome to this explainer. Look, this Wednesday, NVIDIA is scheduled to drop its latest quarterly results. And Wall Street, well, they're watching absolutely every single number with a microscope. Because let's face it, NVIDIA isn't just a semiconductor company anymore. It's the beating heart of the AI infrastructure race, powering the world's biggest data centers where tech giants are dropping hundreds of billions of dollars.
Okay, let's dive right into this undeniably massive metric, $5 trillion. That is essentially NVIDIA's valuation right now. They've evolved into this $5 trillion financial symbol of the entire AI revolution. But here's the catch. The bigger they get, the higher the stakes. Investors aren't just sitting around hoping for a good quarter anymore. Nope. They are banking on extraordinary, totally explosive, market-defining growth again.
So let's get into part one, the $5 trillion test.
Now, what's really interesting here is the sheer scale of the financial engine we're dealing with. The absolute biggest tech players on the planet, we're talking Microsoft, Amazon, Alphabet, Meta, they are pouring unbelievable amounts of cash into next-gen AI. And guess what? Almost all of that capital flows straight through the ecosystem NVIDIA currently dominates. I mean, look at these numbers. $62.3 billion in Q4 data center revenue alone. That is a 75% jump year over year. Full-year revenue, nearly $216 billion, up 65%. And down at the bottom, expected Q1 revenue is hovering in the $92 to $95 billion range. They are essentially doubling their revenue from a year earlier. Now, for literally any other company in history, this would be mind-blowing. But for NVIDIA, investors are completely used to this kind of exponential rocket ship growth.
Which brings us to part two, the high expectations problem.
Here's the wild paradox they're facing. When you grow this fast, the market literally stops asking if you're growing and starts asking if you can actually keep up this blistering pace. It's a classic battle of absolute performance versus relative expectations. NVIDIA could come out and report absolute record revenue, record profits, record everything, and still watch its stock price take a nosedive. Why? Because the market doesn't care about absolute performance. It cares about performance compared to what they already priced in. NVIDIA has absolutely crushed expectations so many times that they've set a dangerously high bar. When the bar is in the stratosphere, just doing great sometimes isn't enough.
All right, part three, the $1 trillion Blackwell plan.
$1 trillion. Let that sink in. This right here is exactly how NVIDIA plans to hurdle those sky-high expectations. We're talking about their next-generation Blackwell and Rubin platforms, and they expect the revenue opportunity here to hit roughly $1 trillion. We are completely leaving the billions conversation behind and stepping into the trillions. The Blackwell plan is the undisputed core engine of NVIDIA's future. They are not playing small ball anymore. They are relying entirely on these highly anticipated platforms to keep this historic momentum alive.
As you'll see on this timeline, the entire bull case for NVIDIA completely hinges on this multi-year runway. Right now, we're in the 2024 AI infrastructure boom, but that needs to seamlessly transition into the massive Blackwell platform ramp-up in 2025, leading straight into the Rubin deployment by 2027. This whole master plan requires the hyperscalers, those massive cloud providers, to keep their spending spigots wide open as NVIDIA transitions them to these newer, faster chips. Everybody is going to be watching like a hawk to see exactly how fast Blackwell ramps up, and honestly, whether customers are still desperately waiting in line to get their hands on them.
Moving on to part four, the AI money machine.
You know, NVIDIA doesn't just exist in a vacuum. It sits right at the chaotic intersection of cloud spending, semiconductor supply, and the global investment cycle. That's exactly why this one single earnings report is basically the Super Bowl of the tech market. So here is your scorecard. Come August 26th, this is exactly what Wall Street is tearing apart. First up, data center revenue. That's the absolute heartbeat of the AI story. Second, gross margins. Keep an eye on this because massive product transitions, like rolling out Blackwell, can sometimes squeeze margins. Third, and I cannot emphasize this enough, forward guidance. Actually, you know what? Scratch that. This is arguably the most important metric on the entire list. Investors are paying for what NVIDIA can do tomorrow, not what it did yesterday. Fourth, we've got that crucial Blackwell and Rubin demand we just talked about. And fifth, customer spending patterns. If those major cloud companies signal they're keeping the AI cash flowing, that's the ultimate green light. But wait, we can't ignore the massive external wildcard in the room, the China question. Geopolitical tension and U.S. export restrictions create a really complex variable for data center revenue. NVIDIA's China business has taken some hits from these rules, actually forcing them to exclude certain China compute revenue from past guidance. So keeping this explainer totally neutral, The reality here is that NVIDIA's destiny isn't just about pure supply and demand anymore. Government policy and strict regulations on who gets to buy what create a very real layer of uncertainty that investors absolutely have to factor in.
Which brings us to Part 5, Risks and the AI Bubble.
So we've got to ask the uncomfortable question, right? Are we looking at a bubble? Is NVIDIA proving that this AI boom is sustainable, or are they just the shiny hood ornament on a totally overheated market? This quote really hits the nail on the head regarding the dot-com era. A technology can completely transform the world while investors can still pay too much for it. It's a perfect parallel. The internet absolutely changed human history, but man, those early stocks were still wildly overvalued. AI could very well take the same route. Now, to be fair, NVIDIA is printing massive amounts of actual cash. So this isn't some vaporware story. The tech is incredibly real. But it's totally possible that some AI investments across the wider ecosystem might just fail to deliver the astronomical returns people are banking on.
And that brings us to the actual stakes of disappointment, the ripple effect. NVIDIA is essentially the global confidence indicator for tech right now. If their forward guidance cracks, even just a tiny bit, it wouldn't just be a bad day for NVIDIA. We're talking semiconductor stocks, data center stocks, cloud companies, all facing an immediate brutal valuation reality check. The market could wake up and realize just how much of the future it's already priced into today. Just a tiny slowdown in spending could drag the entire ecosystem down. Because remember, NVIDIA doesn't even have to fail to cause a panic. They literally just have to deliver slightly less than perfection.
So, what does this all mean for us? Well, I want to leave you with this final thought. Is the AI machine accelerating, or is it cracking? The big takeaway from this explainer is that at $5 trillion, NVIDIA is no longer just reporting its own quarterly numbers. No, it is reporting on the health and the expectations of the entire market. They are the ultimate litmus test for the billions pouring into AI, for that massive $1 trillion Blackwell plan, and honestly, for the future of the tech economy as we know it. The numbers they report will tell us if this rocket is still firing on all cylinders, or if it's finally time to brace for impact. The whole world is going to be watching, are you?